Hello, everybody. This is Stephen Gardner, best-selling author of Taming Wall Street, and I'm excited to have my special guest, Denzel Rodriguez, the finance geek, Mr. Velocity Banking himself. I've been trying to get him on the phone for a couple of months now, and been watching his content on YouTube, which is what we're going to be discussing today, going through a really incredible way to increase your wealth by decreasing your debt and then taking those habits that you've built and parlaying those into building a large nest egg of tax-free money. And so we want to get into that. But Denzel, thank you for being on the call today.
Thank you for having me, Stephen. It's a pleasure.
Great. So, a lot of my listeners are probably new to this idea of velocity banking. And so I want to get into that. I know that you're also a big believer in cash value life insurance like I am. But how did you personally come across velocity banking?
So for me, velocity banking started before I even knew I was doing it, right? Which started right around the age of 18, 19 years old when I got my first credit card. I somehow put two and two together that if I ran my expenses through a credit card, got cashback rewards, and then just paid myself back in full, that would be no issue. Now, in my case, I actually had to do these things because I was living in a household, low income family where, it's just my mom, my stepdad, myself, and, the two of them are working real hard, working paycheck to paycheck. And every now and then they would ask me for help, whether it was to pay a bill or whatever the case may be. And every single time they asked me for help financially, if I didn't actually have the cash, what I would do is I would give them my credit card. Here, swipe the card to pay for the groceries or pay for the gas or the insurance. And then that would buy me 30 days before I had to pay that back.
Okay.
Meanwhile, I still had my cash to, pay for the things that I had to pay for, like my own bills that had to be paid with cash.
Yeah.
And by having that 30-day window, I was projecting, well, I'm going to make two more paychecks, or four paychecks or whatever it was. And I just did the math. I said, well, as long as I keep working the way I'm working, I'll be able to pay that card in full. And then when my family decides to pay me back, which was, always up in the air, you never know when your family members are going to pay you back, right?
Okay.
So I didn't count on that, but that was that was the benefit of me, doing that, such a move where you're simply, running your expenses through a credit card and paying yourself back. Now, fast forward a couple more years after doing this, I got a couple of credit cards. I'm 20, 21 years old. I have a steady job. And then I come across, obtaining a line of credit. I had to borrow money because I wanted to go through this course that was going to teach me how to invest in Forex currency. Okay. And instead of me getting a loan like everyone else does in the world, I decided to go get a line of credit. I don't know what on earth told me to get a line of credit. I usually credit God for these things that are just unexplainable, but it was one of the best things I ever did in terms of my finances. I was able to now leverage this line of credit to pay for something that I needed or pay for a vehicle or whatever it is, right? And I figured, well, just like I was doing with the credit card, what if I could put all my income into this line of credit and just have the money sit there? This way I don't pay anything in interest. So I had this, at 21, 22 years old, I had this $5,000 line of credit. Every time I took money out to use it to buy a course or pay for something or give money to my family, I would dump all my income into the line of credit so I don't pay any interest. And then I would just take the money right back out as I needed it to pay my bills,
Okay.
And so now I've got the credit card and I've got this line of credit that I'm using. I'm using the credit card to buy me 30 days to pay my bills. And now I've got this line of credit as additional support to pay off any other, like bad debts that I had. And, So here I am just doing all this stuff. I had no idea what I was doing until I started networking and hanging out with real estate investors, and I was showing them what I was doing. And one of them said, "Oh, you're doing velocity banking. That's velocity banking. Real estate investors do that to pay off mortgages in 5 to 7 years or flip properties." And I'm like, "What? Like that sounds amazing." And then with a little bit of research, going on YouTube, I discovered, I was like, holy crap, there's really nobody talking about this. Maybe like 4 or 5 channels that are covering it. And this was a couple of years back. And so I'm just like, oh my God, this is amazing. Why is nobody talking about this? And come to find out, the concept, it's foreign. So it's a foreign concept, doesn't come from the U.S., so that explains one thing. And then the other thing is that the concept itself, in terms of learning it, it's very hard to come across people that know it, number one, can teach it, number two, and are willing to, invest time with you to teach it. Or, you have to pay them very, very high fees. And so I found an opportunity there to just, I figured, well, I already know it because I'm doing it. So it's like, it's crazy. No one taught me the concept. In fact, and this is where I credit God, right? I think God put that wisdom in me to understand just how money works in the 21st century when it comes to debt and currency, and how to really use $1 more than once, right? And that was a possibility, and I just went from there. So that's really the background how I came across the concept.
No, I appreciate that. And, sadly, none of this stuff is taught in school. At almost at any level, unless you specifically seek out a mentor. I mean, I went all the way up through, business school at the David Eccles School of Business at the University of Utah. I'm telling you, it's not discussed. I took advanced finance, CPA courses, investing courses, and it's not taught. Basic money is not taught. These tricks that the wealthy use, I don't even want to call them tricks, just strategies. It's just having a plan and a strategy and an understanding. And that's why, I've liked your channel on YouTube so much is, you go through and explain it really well on the whiteboard. And I love that. Okay. So just as best you can, concisely, in a nutshell, what is velocity banking, and why does it help people get out of debt so fast?
Yeah, so velocity banking is a financial concept that you can use for your own personal or business finances to help you pay off debt, increase cash flow, build credit, lower your expenses, all at the same time, simultaneously. Essentially what we're trying to do is save immense amount of money on the interest that you're being charged on all of your debts. Your mortgage, your student loans, your cars, etc. All I'm doing is shifting all of that debt over to what's called a debt tool, being a line of credit, a credit card, or a HELOC, a home equity line of credit. This is for homeowners that have equity in their property. These are the 3 types of tools that can be used to pay off debt rapidly. These are banking products. And the major difference is that you have simple interest and you have amortized interest. And all I'm trying to do is shift the amount of interest that you pay on those debts over to no interest, to literally borrow money at 0 borrowing costs. And what that does is that helps me pay off the debt that much faster, which increases my cash flow that much faster, which allows me to, continue to hit the next debt as we move forward. So velocity banking shows you how to use $1 more than once. So whenever I'm talking to someone new that comes across the concept, I always ask them the question is, can you use $1 more than once? Is that a possibility, yes or no? If they tell me no, then there's a barrier, right? And I just got to get past that. But once they realize that, holy crap, that I can use $1 more than once. And if you can use $1 more than once, like 2 and 3 and 4, 5 times over, well, what could you do with $1,000, with $5,000, with $10,000, and on and on. And so what ends up happening is you begin to see that there's good debt and bad debt. Velocity banking teaches you how to use good debt to pay off bad debt, save a ton of money in interest, and recoup all your cash flow in that same process at a faster rate. And when we're running examples, my primary goal is to beat debt snowball, because that's the only other concept out there that shows you how to pay off debt. Is either debt snowball or debt avalanche. And so velocity banking says, hey, if you can be debt-free in 10 to 13 years doing debt snowball, I can do it in 5 to 7. So usually 50% faster on average.
Yeah, and that's how I came across it. You know, we paid off all of our debt except for our home, 6 or 7 years ago, but it was following the Dave Ramsey method. And but you know, as I started to learn about the velocity banking with mortgages and you know, utilizing a line of credit as a weapon instead of a shield, my eyes were just open. And I remember telling my wife, you know, we could have got out of debt a lot faster. Because what people don't realize is, you know, when you make a payment to a mortgage or a car or, you know, some kind of a debt, they know in their mind that some of that's going to interest, but they may not know just how much of it is, right? So like if your mortgage is $1,000, you may not realize that 800 of that is interest. And so, you know, you're only paying down $200, not the full 1,000. But if you could, you know, rob Peter to pay Paul legally, and it all works out for everybody, and then all of a sudden you have a bigger portion of that money, you know, driving down the debt. That's where, for me, it's like, wow, this gets really, really powerful. So I love what you're doing with showing people how to do that. Now you know, based on your background and all of the many, many people that you work with, maybe speak for a minute to people that are listening to this. Why is it so important to become a good saver early on, and why is it important to get rid of that debt as quick as you can?
So from a fundamental standpoint, saving money is a great you know, discipline to have. One of the things I often share with my clients is, you know, to live on 70% of what you make. You've got 10% that goes towards savings, 10% to taxes, and then 10% towards your tithes, your offerings, givings, etc., things like that. Just having the principle down of saving, just that alone can create immense amount of wealth. Now the real question comes in is, where do I save that money? Right? And that is what I like to challenge in the 21st century is, not only do I want to learn how to save money, but I also need to ask the question on where do I save money? And so both are very important, especially if you start early. So I personally, I'm 23 years old, and I've already saved well over 50% of my income. So even though I say, you know, the general rule is, you know, live on 70% of what you make, but because of the position that I'm in, the opportunity, the authority that I have, that I'm able to help people with their finances, and I'm in this industry where I'm able to create immense amount of wealth for myself, I took it a step further and I flipped it. I decided to live on 30% and save 70. You know,
wow.
of the 70, X goes towards giving, taxes, and then savings, of course. And then where I save that money is a whole different ballgame. You know, so starting at an early age is very important. Just getting that principle down. This is something that I teach my students when I'm volunteering at public schools. Teaching middle school students is just that idea of saving, that principle, being able to hold on to money and know when to execute that money properly, when to use it properly.
Yeah, I think a lot of people don't know how to create a vision for their money, right? So somebody gets, let's say, $500, and they can save that, and they look at their bank statement and they're like, okay, I'm going to earn 0.1%. And so they go, forget about it. And then they just go spend it, right? And but they don't have a vision that, okay, wait a minute, if I saved about $500 every month and was able to get compound interest, by the time I get to age 70, I have so many hundreds of thousands of dollars. Okay, yeah, no, I want to save that money, but I think because interest rates have been so low, that I think people have lost that vision or that understanding for how their money could grow and be used to their advantage in real estate or cash value life insurance or owning their own debt or, starting a business, whatever it might be. I think there's the lack of education, but there's also that lack of vision and understanding of what something could do. If you applied this consistently over and over again, where does that get you 10, 20, 30 years from now? People don't know. They don't know how to do that. They don't know how to have that vision anymore.
Yeah, I totally agree.
Okay. Let's switch gears just briefly. So, from our discussions and things that I've seen on the channel, we're both, big fans of being your own bank, the infinite banking concept. This is what I do professionally with mostly doctors or who I work with, showing them how to build a large pool of tax-free money that can never lose, that compounds and grows every year, and then works like a line of credit for other areas of your life. Mm-hmm. Why do you think, as you've worked through people or with people, why do you think people are drawn to this concept of being their own bank or this infinite banking concept? Why do you think people are drawn to that?
I think it's primarily due to the way I position the conversation with all of my clients. So everyone that reaches my channel or people that are clients of mine are coming for the velocity banking. They hear and see that, I can pay off your mortgage in 5 to 7 years rather than the 30-year or 20-year or 15-year, right? And just that alone excites them. So once they learn the concept of velocity banking and they say, okay, I can use the bank's money to pay off my bad debt and recoup all my cash flow in the process, my next conversation with them after they've understood the concept and they're applying it is I say, hey, what if you could establish your own bank, borrow from your own self, establish your own line of credit, and actually get paid to do it? And then in the process, if anything goes down, if anything happens to your life, right, a tragedy happens, that you'll receive a large tax-free death benefit to your family. So this creates a layer of protection. It sparks a new way of being in terms of how you save money, where you save money, and how you manage your finances. And it expands that question even further is, can I use $1 more than once?
Yeah.
When you're talking about infinite banking, you're stepping into using money like 7, 8, 9, 10 times over, the same dollar over and over and over again. It's like you never lose the money once it passes through cash value life insurance. So when I'm working with clients, I take them through 3 phases. And the first phase is velocity banking. Hey, let's pay off all your debt really fast. Let's get your cash flow up. Let's get your capital accessibility up in terms of credit and your leverage capability. And once we get all that going, then I'm like, hey, let's look at this infinite banking concept, becoming your own bank. So we can become free from the banking system itself entirely. Like there's a way to do that, right? And not have to hope and pray for 1, 2, 3% returns, whether it be in the market, and because the interest rates are low. Well, you don't have to worry about that with cash value life insurance. You're able to, receive tax-free benefits, and this is another blockage that people have is they don't know the difference between earning 12% with tax versus maybe half that percent without tax.
Yeah.
Now, when I ask people which one would you rather have, the 12% return with tax or the 6% without tax, consistently, guaranteed, every single time, And a lot of people end up always just go for the 12, and they don't realize just how much money you're going to pay in fees and taxes. You're going to end up with a net return of 6% or even less, or much less.
Yeah.
Whereas I could have just got rid of all that by just having a tax-free gain of a solid 6 or solid 4, solid 5 my whole entire life, in addition to, a death benefit being the cash value life insurance. So it's a very, very attractive conversation, especially for my older clients that are in their, late 50s and 60s. They just find it amazing because they can actually leave something behind for their children, even if they have a $250,000, $500,000 in debt. That there is a way out, that they could, clean the page, have people start fresh. So if something happens to them and they die with all this debt, they don't have to worry about it transferring to their kids.
Yeah, absolutely. That's such a huge thing is, I tell people all the time, like, if I don't have 4 decades to build wealth, and I die, then my family's taken care of. But if I live, then I've been compounding my money for decades. I'm going to have a nice nest egg of money that I can then take a tax-free stream of income off of. But all along the way, my money isn't tied up like with an IRA or a 401k. So, my wife and I, we've been able to do multiple cars through our plan, different real estate, hard money lending or rental properties. We've taken vacations. I mean, we've done quite a few things with our plan. But if I die, my family's taken care of, and that's a big deal. Okay. I see. You're big on the line of credit. I see these cash value plans, and they do take a couple years to get up, right? You got to capitalize it just like a business, give it a few years to grow, but I see that as one of the greatest lines of credit that is out there. What are your thoughts on that as one of these lines of credit?
Oh, I agree with that 100%. So originally I said that there's 3 types of credit lines. There really is a 4th, being the cash value life insurance. But for most people that are average working Americans, 50, 75K a year or less, it sometimes is not ideal right away. So that's where velocity banking comes in. Yeah. And when I'm working with clients, literally I'm simply positioning them to not only become debt free, but to also start the infinite banking and start the policy up at some point. That is one of the goals, as moving into like phase 2. So phase 1 is velocity banking, phase 2 is infinite banking. At some point, I'm going to tell them, hey, it makes more sense to borrow from yourself, not pay any interest whatsoever, keep all your cash flow in the process, and protect your life all at the same time. Again, money, $1 being used more than once, right?
Yeah.
So I'm in total 100% agreeing that cash value life insurance is a line of credit once you get it up to a certain amount. And what I do to fast track that process is I leverage people's debt tools like their HELOC or a line of credit or even credit cards. I personally, when I started my cash value life insurance policy, I put $70,000 into my tax-free bank, which of that amount, $61,000 showed up in cash value after, the premiums and the expense charge of the life insurance itself. But the way I actually got all that money was I used my cash flow, my savings. I pulled from a credit card at 0% for 12 months. Didn't cost me anything to do that. And I pulled from a line of credit, which was minimal interest costs, very, very minimal. And I did the math. I basically said, well, if I put all this money in there, at the end of the year, I'm going to earn maybe 4 to 6% return on that $61K. Yeah. Whatever I earn is going to offset whatever I borrowed. And now that money is mine forever. And now I've got a $60,000 line of credit. There's no need for me to use my personal line of credit anymore at the 9 or 12% rate that it's at.
Yeah, and I think that's, you bring up a good point, because it's like, okay, would you want to save $500 a month until you have 60 grand and then get that money working? Or would it be better to have 25, 30, 40, 50, 60 grand working right now and then paying off that line of credit with money that loses value every day, right?
Exactly.
To inflation. And so it's like that cash flow has to stay consistent, but it's with a debt instrument that's losing buying power, where if you could do a big chunk of money and get that earning a much higher rate than a bank can offer at this point, and probably for, at least another 10 years, they have no idea how to raise interest rates. But you get that money growing and compounding over time, and then you're using your cash flow to pay that off with money that's losing value. So, I think that's really neat. And, I know probably a portion of the people that you work with, getting out of debt has got to be their number one priority. But I'm guessing there's people you come across where they can say, okay, I need to take a portion of my money and start building some wealth now, and a portion of that driving down the debt. Do you see where those two can complement each other at the same time?
Yes. I have a criteria for myself as a ethical life insurance agent before I, am willing to write a policy for someone. I want to make sure that they can actually fund the thing consistently year after year after year, right?
Oh, absolutely.
So when you're talking about complementing each other, velocity banking and infinite banking together, and I've done videos on this, is there comes a point where, I help this mom wipe out all her credit cards, her car loans, student loans. The only thing she has left is the mortgage, right? Something big. Based on her amount of cash flow, her credit line accessibility, and if she has other retirement vehicles such as like a 401k or IRA, like you mentioned before, what we might end up doing, because her mind has shifted in terms of how she's going to use her money, is she might say, well, you know what? It doesn't make any sense for me to have my money at risk at the market. Let me just pull all that money out, and I can start redirecting. This is a term that I use often to increase cash flow or to build up a life insurance policy, is I'll redirect assets into a tax-free asset, which I'll then borrow from to pay off that mortgage at a super fast rate. Because just by having the debt shifted from the mortgage company to yourself, understand that whatever I'm being charged by the insurance company, I'm going to get it all back no matter what. Yeah. In fact, I'm going to get more than what they're charging me. And that's how, if you're working with an insurance company that structures it properly, and you have a properly designed policy for high cash value returns and dividends, then you could literally keep a $250,000 debt mortgage in that life insurance policy, but you'll also be earning $250,000, 4% on $250,000, even though it's sitting there, and then you can keep funding the policy, right? And just sending all your money there. So it's
and that's where if people really understand compound interest over time versus simple interest being paid back over time, compound interest wins every time. Mm-hmm. And so getting that money in and letting it be credited and then start earning that uninterrupted compounding interest, but then you can take it right back out to go get rid of some of these higher debts and different things.
Exactly.
So, it's there should be a term, infinite velocity banking or something, you know what I mean? Someone's got to come up with something like that. Yep. But the two just complement each other
they really
so well.
Do.
Yeah, and I love that you were willing to get on the phone and go over this so I can make this introduction to people. How do people find you? What's the YouTube channel so that they can learn about this velocity banking for themselves?
It's my name, Denzel Rodriguez. But if you just typed in velocity banking, I do rank pretty high on the first page, so you'll see me there. There's a couple of other guys that also talk about velocity banking, but there's still to this day there's very few channels that talk about velocity
You're
banking?
you're the one to talk to. They don't need to talk to those other guys.
Yeah.
Right? You're the man. I've watched the videos. I've seen the other guys. You're the one that they want to connect with if they need that mentoring and help. You know, Denzel, I want to thank you for taking time to get on this call and share this information. Let me introduce people over to this velocity banking concept. Any last words of wisdom before we sign off?
Yeah, you know, again, that fundamental concept, living on 70% of your income, could be a drastic change in your life in terms of paying off your debt. Just doing a simple shift like that, looking into the velocity banking concept, see how it can work for your life, eventually upgrading into infinite banking, and then building a kingdom that will last forever in your life. And that's something that I personally love to do with all my clients, is focus on that end goal, that purpose-driven life, which is to build a kingdom in your own household, in your own economy. You're literally creating your own economy in the United States, where you have the most amount of opportunity ever in the world, you know?
Yeah.
So that's what I would leave people with is, you know, build a kingdom, get your finances in order, and really commit to surrendering what you think you know about money, right? And your ability to unlearn and relearn what you think you know about money.
No, that's great. One of the reasons I went into business for myself, I don't use the word kingdom, but I use the word empire. I got tired of building somebody else's empire. And I wanted to have control of my schedule, my money, you know, where I focus my time. So I love that. Everybody listening to this call, thank you for hanging in there with us, and we appreciate Denzel taking time out of his very busy schedule to be on with us. If there's anything I can do to help you, you know, please reach out to me. Again, this is Stephen Gardner, author of Taming Wall Street, with my special guest, Denzel. You can find him on YouTube. Look up Velocity Banking. He's the guy with the cool beard, a young guy. And thank you again, Denzel, for being on today's call.
Thank you, sir. God bless.
Bye-bye.